This week I'm going to talk about job creation. And in October, the U.S. added about 128,000 jobs, which brings the year-to-date total to about 1.67 million positions. That puts us right on track to hit our 2 million job forecast this year, which is what we put into our reports over a year ago. Hiring has been strongest in the healthcare sector with 2.7% growth, bars and restaurants with 2.6% growth, education, entertainment, and construction all doing very well. Now, the key thing here is that a lot of these are in retail centers. So even though we're seeing a lot of publicity about the weakness in the retail sector, when you look at Retail Reinvented featuring urgent care or healthcare clinics, bars and restaurants, entertainment venues, etc., retail has a strong outlook based on the jobs we're creating. Now, unemployment remains very tight, even though it went up 10 basis points to 3.6%. That's a really small movement. And we still face a significant labor shortage with more than 1 million more job openings than there are people looking for work. This is sustaining pressure on recruiters and keeping wage growth in the 3% range. And this combination is sustaining real estate demand. Vacancy levels are very tight for all types of commercial real estate. Hiring and wage gains are supporting housing demand, retail, self-storage, hotel, and even industrial space demand. Office, especially medical office, has a really strong outlook based on the hiring trends, and the big question on investors' minds today is how much runway is left. Based on investor surveys and most economists' predictions right now, we still have at least a year to position for the next softening of the economy, which means investors have time to lock in different opportunities. So a couple ways that investors can capitalize on this is by positioning into assets in areas with stronger economic growth, and by diversification. By acquiring assets and diversifying into properties located in the southern U.S. as well as the western U.S., investors may have the opportunity to position ahead of the growth migration that is taking place. It also will give some diversification opportunities through markets like Texas and Florida and the Southwest and even up into the Pacific Northwest. Mobility of capital is key, and low interest remains supportive of leveraged yields. So, as investors look forward, they need to ask themselves, how much runway do we have left in each market I'm targeting and by property type, and then position into the right assets to capitalize on the future trends.